Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom Lee. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? How's the audio now? Is it good, or is you how we doing? Discord okay? Let me see if I can adjust. Just check a few settings here, guys. One moment. Okay, how we doing in Discord now? Are things better? Okay, yeah. One second. All right, sorry about that, guys. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. It's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. There's no cost for the Trader Lab, as well as a library of webinars on the process. This is really about the business of trading, trading plans, and trading only with a statistical edge. And of course, like everything, the outcome of any trade or the outcome for any specific trader who is developing is always random. You have to do the work. And the idea of Trader Lab is to be in a community where you can get support and other traders just like you who have walked in the same shoes and taken the same path. And we all have winning trades. That's not the issue. Anyone can have a winning trade. The problem, of course, is having more winning trades than losing trades and actually have an edge. And many of us as developing traders do not trade with an edge. We just have winning trades, but we lose over time. So the idea about all this is to try to do trades that have an edge, stay away from the others, and just like casinos potentially have the opportunity to extract the dollars from the gamblers, even though we pay the gamblers. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. Whoa. This is based on structured trades and individual trade plans. And what is always interesting about trading is different traders trade different time frames or different fractals, as I think of them. And today was a good example of that. There were traders in the Trader Lab who are taking longs, and there were other traders, and me as an example, who were trading what's called mean reversion or outside-in trades in shorts. Both trades are profitable, subject to having an edge when you execute them. And the other part of that is, while I was on the short side for a fair amount of the morning, trading the rotations, and it was, let's just say, a very constructive day, I'm now long. So the thing about the trade plan is knowing where your trades show up, knowing when the condition changes, and then seeking to get alignment if you have a trade for that. And on the other side of that, if you don't have a trade, then your job is to wait either until you do or you have nothing to do. That's the business of trading. So let's go take a look at it. But I always like to start with the higher time frame. So let's go see what that might look like. This stops are above this consolidation. So any shorts who've been short all through all of this, If they're still hanging out, they got their stops at 28. Now, here, of course, we have the breakout above this consolidation, this huge gap, which at some point you might want to make a note that we will revisit that. Don't know when, but I can say the nature of the market is to fill gaps. And then this is the fuel. So we come up on the huge gap. We have more buying, and you'll see we had some selling up here. And we're right at this 59.27 level, and 28's where all these stops are. Now, yesterday was interesting, of course. You know, I find every day interesting, is that we opened and we didn't take this high out, and then we started rotating. So I was looking at this and I'm going, well, if we rotate, then the possibility is, after getting shorts in, to come across the range, and my last trades yesterday were longs, to come across here, take this out, and get into these stops. Well, we didn't do it. So there's a couple possibilities. And part of the process, at least what I figured out from writing code and systems, in fact, I think it was T46 mentioned this, that he used to do programming like I did early on, and he's in the Trader Lab, was conditional statements. So when I wrote code for trading systems, it was conditional. Well, if this, and we get our buying, then take this out and take the shorts out here. Then that. If not, then what? Then the stops under here and the stops under here, and then where she goes, nobody knows, you know, that kind of thing. So, and then two possibilities. If we get under here, we can come down further and test this price around 55-ish, or if we don't, once we get these stops out, we now come back across the range, and if we get back in here, we can go to 59.08 and then come out the top, which is what we were looking for yesterday. All it is taking out the week long so the market can go higher. Make a note of this. The market goes up to go down. The market goes down, and who knows where, go up. And now we're back in this because the higher time frame trend is up. So I was posting in Trader Lab this morning that it was conflicted because we opened out of value. Now, what is this value thing? And let's take a look at this. Yes, this is the yesterday's high and the previous day's high. We missed it. And we have what's called single prints up here, and we have a boatload of fuel or buy stops here. Yesterday was shorts down to this location. And if you follow the stream, this was on, as they say, the hip parade. When we came outside, that was the targets, and it could do anything, you know. And then along was here. It's a structured trade called the IBF, or IB failure. It is a reversion trade. And the idea of this one, just to give you an idea, was to take this out. So squeeze. Okay? Well, not so much. So we closed here, and this is our value area. So this is where 70% of the volume was yesterday, and this orange line at 08 is the fair price. So if we go lower somewhere under yesterday's low, find our buyers, and we come back in the value area, then we have this, and north. Okay? That's the plan for today. Then it's, what do you do? Well, now we go into fractals and time frame, if you will. And what that is, now, yesterday's low, yesterday's value area. When you open, and basically we opened out of range, out of value. Now, this is sort of a toss-up. You know, if we opened over there, does that change anything? No, it doesn't. Now, here's the potential targets. ETH, volume point of control. This was the retail price. ETH low is below us. Let me take you to the ETH low. This is a potential target on the downside. Now, the thing about this is we tested this area. And we took out, let me just see where we were, 58.64. Let me bring you back to some ideas here, if I can find it. $64. This is where the stops were, and that's the potential target. So when I was thinking about this morning, I was thinking, well, we've got 64, and we have, again, and this is all about trade plan, 55, and we've got overnight VPOC. So I was looking for this initially, and if this is too low, to come back across and potentially take out these highs. But initially, I was trading shorts. So, and that's just the way it is, part of the joy. But that sets everything up. So let's go take a look at the first trades. Is everybody tracking it? Is my audio okay? How are we doing in YouTube? It's making sense so far? Okay. And if you find this interesting, guys, please give a like if you're visiting in YouTube. There's also a link. So now, and I find in these conditions, and here's the key driver for me. This is yesterday's range. This is really important. And this is yesterday's value area low. When I open on the edge of the range or outside, pick one, and I'm under the value, I am rejecting the current perception of a fair price. So that sets up shorts for me initially, and the idea was to go here. So that was my orientation. So I was trading something called mean reversion, stressing the word mean. 8:30 is when we start. This yellow line is called the developing volume point of control. Now, what this is, trading is not complicated. It's just random. So let's look at this and what it says. So when the market opens, I see my buyers, and this now is what's called the variable high volume node. What the market is trying to do is figure out what's too high, what's too low, and, and of course, that's what it's always trying to do. But depending on the behavior, we can kind of get some ideas. And this is what this is saying. Again, language. If the volume was here and the initiators are here, and I get more volume up here than I have down here, this can suggest resistance and support. Now, because of where I open, I don't have anything to do. Me. Now, I'm not saying somebody else doesn't. I'm just following a plan. Now, I'm going to show you structured trades. Now, the thing about a structured trade or any trade you take, it needs to be in alignment with your fractal or time frame that you trade, and it has to be in alignment with the current context or condition of the market in that fractal or time frame. And this is what is really different in the sense of how individuals develop their plan. Some traders are only going to take longs. Other traders are going to take shorts. Some traders are going to position for the larger move. It's all a matter of your mental alignment. So let's look at this. Market opens, I see my buyers. But what else do I know? I'm out of value. Okay? Well, if I'm out of value, what am I going to do here? Well, I'm going to be looking at the ETH mid, which has a high probability. I'm going to be, this is not accurate full session VWAP because it moves. It's keeping pace with, which I don't know where it is. It's up here someplace. And again, where to? To here. So opening, let's just say outside of range, the market is out of balance. So is the market responsive? We find buyers. So what do? We either fade the gap back into balance, or while we're fiddling around here, we can be trading back to balance. So we can go this way to balance, or we can go from the other side to balance which is higher up. And I know it's going to drive you nutty because you're going to ask, which one should I do? This is where you come into the picture and determine the range that you want to trade. I always find it interesting because traders who are selling this can be profitable if they have an edge. They just trade their edge, and traders who are buying it can become profitable. It just doesn't matter. So here's resting liquidity. Now here's what I know. Too low, too high, break high, north. Now I'm under the value area low. So for me, I looked at this and I took shorts. And I'm not saying that's a good plan. I'm just saying it's my plan. Now, right here is VPOC migration. What this sets up here is if I have to be very careful here because if this now is the new retail price, then maybe this is too low. So I know if I can get below here, I can come here. And then I can come out the bottom. So that's what I'm looking for. Okay, so this is my short, and I'm going here, and I'm looking for out the bottom. My next stat is going to be the ETH mid, and then that's my trade. So, say la guerre, right? And where do I come? I come here, and then I'm looking for lower. So this was my first trade, and these are, for me at least, and there's another little piece. You see this right here? Variable high volume node. Follow the yellow brick road. Now, this is auction mechanics or auction market theory. Now, what is this auction market theory thing? I always think of Igor, in the lab, because the theory of the auction is where are the sellers? Where are the buyers? Well, if we understand market mechanics, we can determine there were buyers to control here. We can understand that sellers absorb these buyers. Let me open this up for you. And I've got to put a little box around this for you so you can see it. And there's a language going on here. Let's see. I think we'll put it right there. So here's the language. Retail price. So this is kind of a funky trade. This thing, don't forget, this was down here. So I was going from here to there. Well, it pushes a little higher. My stop is outside behind this. I get selling icebergs and I get absorption. Now, right here, my teeth chatter. I figure, I'm toast. Well, no. I break again. Now what? Too high. Break low. So this is a trigger right here, and your stop would be here. This is another trigger. You can enter here. Now, right here is where there's potential trouble. And this is a key event. This is the retail price. It's moving higher. And if this is too low, I can do this, and I could take a stop, of course. Well, right here, I get VPOC migration. I break low. If I don't clear this, then I'm looking at that. Right here, look at where this is. Look at where we come. Too high. Where do I come? Too high. That sets up a reversion from here. So I've got a short here. I've got a short here. I've got a short here. And I'm going for this. And I'm looking to come out the bottom. Okay? Where do I come back? I come here. Where to? There. I'm trading the auction. Now, other traders are getting long. I'm getting short. Now, it is not about who is right. If you think that way, not good. It's about your plan and your edge. That's all this business is. For me, as long as I'm under here, I'm trading the shorts. Okay? So that was me. That's me. This can be me. Back here, same trade. Notice the location. Where's my resistance? Let me show you. Multiple elements, and I can't see your questions if you have any, so just host, and I'll come up for oxygen. Here. So this is a short, this is a short. Now remember, on the shorts, I'm going for this. Now this is where things got interesting. And we started talking about this in Trader Lab. Right here, this is an auction or distribution. And I noted this, and I also understood what I was looking at, and I want you guys to see it. Because there's traders in Trader Lab who got long here. Now, I didn't get long here. Now, this is a distribution. So let's look at what this says. This is the language. I'm under yesterday's low, don't forget, and I'm thinking that I want to go lower, of course, to get long, to come across the range, to get into the fuel that is above. Okay, and liquidity currently is resting at 30. That's another area for me. And that's, well, I'll explain my long to you. Not yet. So right here, now you'll notice we come down here and there's nothing going on. I get buyers above the sellers. Now right in here, I don't know anything about it until I come across this. This is now called a low volume node. What it says, and I was not, this is not my thing. I'm just going, well, that's interesting, because now I know where too low might be, and it's right here. And here's why. This is an auction. Remember how the market works. It operates in, as you guys think, multiple time frames or fractals. Now I'm going to show you something here, and this is how I keep track of things. What happened up here? Up here, I had the same condition. This breakaway leaves low volume. Oh, that's not good. Hold on. Guys, are we doing okay with data from Rhythmic at the moment? Hold on, guys. I have to make sure that things are... having a little problem going on here. Okay. One moment. Okay. So this is my resistance. It's an outside edge. I got the same thing here. The high volume is... We are having some problems. Hold on, guys. Things are getting a little weird. Whoa. All right. Not sure what's going on. Have a little software event happening here. Okay. So right here, the buyers take control, and that leaves this. This is an auction. Let's think fractals. If this auction, too high, too low, retail, if this price where the high volume is becomes too low, we can leave it, and then we can do these rotations around all these auctions. So what I'm doing is I'm trading micro auctions, because in this space, if you will, we can find what might be too high. So I have buyers, limit orders, icebergs, liquidity. That sets this short up, okay? And this sets the short from here. So short, short, short. So these are the trades I was taking in the morning and looking for it, okay? Now, when I get this, it suggests to me that this is a very important level. And if I come back to it, I have to get below it and below this to fall out the bottom. If I can't do that, then it suggests now the market might be sold out, and anybody who is short is going to get squeezed out. So let's look. Now here, once we come across here, we hold this. So for me, it was short, 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 and then out of my short. And then now what? Well, the next area is value area low, and then to observe what happens up here. But what is important? What happens at the value area low? See this? I took a short here. Just a structured trade, no big deal. And it's, again, mean reversion. And I'm coming back here, and I'm coming back here. And I know if I can get below here, then I can get, go south of the border. So I did not take any longs ever today. No, that's not true. I should say I did take a long, but I'll explain that one to you. And I even posted in TraderLab, I'm trading mean reversion. That's outside in. And I'm trading at locations that I have an edge. Not necessarily any specific trades are going to work, So here I have a sweep. Here I have the ETH high, which has a high probability, either ETH high or low, over 90%. And I get my sweep. Now let's look at the trigger. And remember, other traders are looking for longs. So I'm sitting here and things are dubious. I'm back inside of this. So all of this has me conflicted. The higher time frame is up. We have a location below that might be too low, and I'm still trading rotations. So I get to the ETH high. I have a sweep. This tells me the potential for counter rotation, not a recommendation. By the way, we had a sweep here, and what did we do? We didn't. And no location. Here, a sweep, potential location, mean reversion. Not so much. Buyers are in control. A sweep again. Buyers are where? No, look, I got sellers. Where's my resistance? Look. Now, I don't know until hindsight where resistance is because I see the change in the behavior. So right here is where the sellers take over. I'm outside. I've got my ETH high. I know this has a 70% probability, but I'm also trading reversion. And again, it's plan specific. I see the book thicken up. Right here sets up a short. And if I didn't get in here, and I tend to, because I can read order flow, I tend to be rather proficient, and I still take stops. So not the point. I'm going to draw a little line here for you. So this is my resistance. This is another trigger. I got resistance here, resistance here. Back to there. So that was my short. And then where's my support? It's out here. This. So let's watch. It doesn't get back there. Okay. This is, I believe, was the full session VWAP at the time. And we checked yesterday's low. So we're in range, but outside of value. So that's what created a bit of a mixture for me of things. But we have to remember the high time frame. So once we got down in here, see our buyers, we try again. And let's come back. I got to extend something for you. Let me do this. I just want you to see. Now, again, no precision. Would be nice if there is. This is where the sellers were and the buyers took control. Notice where we come. That's absorption. This is a potential long. I did not take it. Other traders in TraderLab did. And that's the better trade in the sense of the range. But again, that wasn't what I was trading today. But I also have other trades to get long. So I'm going to show you those. And that's the one I'm still sitting in over here. We have a trade in the Trader Lab called the IB continuation trade. Where is it? There it is. It is here. So this is the first hour's high. Right there. And we have and if we take the first half hour's high out, which is here, we have a high probability of taking this out. So even though I'm fading, I know I have to be cautious coming back to my long, which would be over here. So for me, I see the sell sweep. This was a terrific entry for those who took it. Okay. And again, I didn't take it. For me, it was time to get out of the shorts, you see. So then nothing. So now it goes away, runs away, and I don't have a position. So what do I do? Well, I have other trades, right? So for me, it's been a good morning. And now we have what's called the IB continuation trade. Here it is. So the IB, now, so what I've done is I've left these distributions. And I'm now breaking out, and I'm in the value, in the range. And I remember what at the top of the stream was the fuel is there and there. Yesterday's high, the previous day's high, and to come outside. So 30 and then somewhere, part of the joy. Okay. And let me go one other place so you know where this is all coming from. The stops are here, and the stops are at 28. So that sets up 28 and possibly 30 or not. So this area, and the trade could be over, or you're managing your trade. Me, because we're breaking out of this consolidation, I manage, and I'm clueless. So I don't worry about it. I just manage the trade, and whatever happens because I have no control. So far, does this make sense? And I'll talk about the IBC in a moment along here. How are we doing in YouTube? So let's take a look. The box break retest T46. Yeah, I used to call it a box years ago because it was a consolidation break test. Before I had Bookmap, I had to do it with price action. It was really the same thing. So this IB high, let's look at the IB continuation. Now, why would the IB continuation be qualified? Well, we got shorts in the market from yesterday and this morning. We got a long, again, I wasn't on it, down at this outside edge here. We came back and checked it. See, the check of the distribution is the long. If I can get this over here. Yeah, here. So, and you had to sweep. All of this is alignment for a long. And you would have to jump on this thing, and your stop would go under there. And once we break away from this volume, you could pull your stop up. And then that's that. So that was the long I didn't take. Still not a big deal. Now here's the long, the IB continuation. And we have traders in the Trader Lab who are specifically working and vetting this trade. If you come to Trader Lab, you might want to check out how you build a plan and how you build a business. So this is where I got long. So in between, once we came out, then I have to wait for my next trade. This is my next long. So, or long. So before this, I didn't have a long. I had not taken any longs as my first long. So sweep, liquidity, this was support, right? And I ran out of here. So now I've broken out. I have found what is too low. This was a rotation down, right? I'm now coming above all these levels. I break here. IB is right there. Let's show the trigger. And don't forget, this was a 70% probability also. So for me, as soon as we broke out, pulled back, I'm looking for absorption. So, and this is a low volume area. So at the breakout, I got this. Liquidity was here. These are sellers. Buyers consume the sellers. That suggests now that even though we have passive sellers, the buyers are in control. So now I've got my IB and I can look at this level as potential support. Right there. So this is my long. Scale was here. And then helmet. And this, well, this is advanced, but this was an ad for me. Pull back, value area high. Stops under here. Absorption. Liquidity. Serious buying. Selling back here. Now, the fact I do something doesn't mean anybody ought to do it. And it doesn't mean anything. You know, the fact that I do something, I take stops all day, you take stops, you know, welcome to trading. This is a structured trade for me. And the thing that's driving the longs here is the trend is up and we have fuel sitting above. Wow, I got my target. I'm flat. Look at that. Most amazing. So this is an ad or nothing. And why might it be an ad? Outside edge and value area high. If I get out of value, that means now that this might be too low. I'm above this, which was the fair price from yesterday. I'm above settlement. I'm outside of the opening range, which means a higher time frame participant is in here. And they accumulated on the low. So this was either an ad or nothing. And let me show you how this would work. If you got long here, where was too high? It's here, right here. So if I get long, I've got to scale there because my sellers are there. So if I get long, I've got to scale ahead of this. Because you see the icebergs? Why did the market break here? Chop, 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 break low is a trigger. It's not a short unless you're using these triggers for trade management. For me, it says reversal. Don't take a long. Then I got to look and go, well, where are the stops in the last swing? Well, this is too low. I know that. And what about this? I got my buyers above here. So my absorption was here and here. If I come back to an area where there were buyers, absorption, is it possible those buyers will be activated again? And I have alignment and an outside edge. This is actually something called mean reversion. And now I'm trading in fractals. So remember I was taking shorts. It was outside in. Well, now if the quote trend is up, I'm trading the opposite side, outside in. And then I'm looking to the left to see where the market might come. And if the buyers that were here who absorbed these sellers, are they still in here? Well, yeah, they are. So there's my absorption again. Buying icebergs. Break high. Structure is right here for a long to scale. You see the structure? So I'm trading these rotations inside of higher time frame. Now here's where the buyers were. So this becomes my support. See? That's a bit advanced. And then my target was 30, wherever the heck I think we got it, because I'm flat. And I think I'm current. And this was a target also, single. Okay? This is not updating at the moment. I've had some calamity. Are you guys tracking? How we doing? How we doing in YouTube? Are you guys okay? Yeah, Cora, good afternoon. Yeah, 46, I did mine on Renko's. When I was designing and researching the triggers, this is before I had Bookmap. So I was doing that back in, I don't know, 2000 and change. So I only had Investor RT. I would use, well, at one point I was using 2-tick Renkos many years ago. Then I went into 4 for my trigger chart. I found that the Renko takes the noise out. And if you guys in YouTube, I don't know if you've ever looked at Renko charts, but they're little, it's really a range-based chart in the sense of it has to move a certain amount. So it's not time-based because the clock makes bars up that maybe don't mean anything. So when I was first doing this process, I did not have order flow. There was no Bookmap. I think I got Bookmap in 2015. So before then, when I was doing this, it was the Renkos. So that brings me current. I'm going to try to restart Investor RT. Something went a little amiss with it. And which is totally unusual. It doesn't do this. So I'm going to see if I can get it going again. And if you hear a lot of buzzing and things going off, it's Investor RT having a hiccup. Yeah, it's having a hiccup. I don't know. Something got out of whack here. So I'm going to have to close Investor RT. Like, one moment. I think I did something to it. Okay, so the levels that you see on my chart are not current. That's why they're not updating. These over here, because the high of the day is out here. So this is not going to update at the moment. Anyway, my trade's done. So now I could be done, or if I'm a rotational trader, I can be trading these rotations. But if I'm not, I have nothing left to do. I get back in the Barca Lounger. I'm outside of yesterday's range, but I've gotten, this is a target. Now, trading counter trend, you've got to know you've got a edge doing it. You might not want to do it because we're outside of a key location. In other words, 30 was my target coming up. I've now got these stops out. Now it's possible that we can accelerate out of here after some rotation. So, and when you see these rotations, it isn't necessarily shorts trading a reversal. It is profit taking. So they are responding to this and they're taking their dollars off the table. So then the question you need to know the answer to, not what will happen, but what you're going to do. Are you going to exit on the shorts to get long again for continuation because we have a breakout, or are you going to fade it to get the longs out who are now long up here, and then we counter rotate and take the weak longs out? I mean, I'm mentioning this because both are absolutely viable. You need to just know what's counter trend and what's aligned. If you want to trade with the trend, we know it's up, and we know we got the stops out under here. The fuel is out of here. Then the fuel was up here. Buy stops, I call it fuel. Years ago, I built trading systems that would trade primarily into stops, because I used to always get stopped out like you. So I said, maybe I can do something with this. Like, let me trade the other side. So I can trade into the stops, and I called it fuel. So fuel was under here, fuel's up here. So if we go down, then we go up. If we go up, we might rotate down, but the trend is up. So if I take shorts, I'm only looking to clean out the longs, the weak longs. And or I skip the shorts and I look to get realigned for continuation higher, which may or may not happen. Does that make sense, guys? Can you kind of see that you can devise a plan to trade either side of this, but the trend is up, so the edge belongs currently to the longs? You guys have questions? Richard, low volume nodes are outside edges where there was acceleration. So as you're coming up, if the market accelerates, let's come back here. So this is out here is low volume because let me move it up a little bit. When we came above this and you see this run, that's urgency, and the market is not auctioned here. It's just ripped. And it leaves this. No volume because we move to a new level. We chop. That's the new retail price in this auction. The outside edge is out here. So if the market, wherever it goes, and we find low volume out here and we rotate, I can be looking, and for me, location. So that's why this was an ad for me. Now, this is a little more nuanced, but I also know about this. Once I'm above this, I know this is too low. So this space in here is my low volume node. So because of this. So if I come outside, I know I have stops here, and this is poorly auctioned. A couple things can happen. I can come down into this, and I could come down here. So when I was looking at this trade, I was going, well, I've got this on this top outside edge. I've got this, which suggests higher, and I could test into it. There's no precision. I'm above this, and I'm above this. So when I put this trade on, I was leaning here, and I knew it would fail under here. Okay? So I put the trade on. There's my trigger. There's my test, the absorption. I'm at an outside edge, and it would have been better out here, but I know now that the shorts are in trouble. I want to join the longs. And I already was long from all the way down here. So I have no risk. I have open trade equity. And in this condition, looking for the breakout up here, that's a trade I would put on. If we were inside of the previous day's range with no stops, in other words, this is a unique environment, that's why I would add. Otherwise, I wouldn't add. But that's just me. That doesn't mean anything. Anyway, I hope that answered your questions. And 30 was my target up here, you see. That's sitting out there. So that's why that was where I was going. And that trade's over. So, anyway, I hope that answers your question. Uh, the context that for lot Tony is asking, the trade to take was after week longs got taken out. Yeah. And outside in from the low. Yeah, right. Yeah, I was looking for the overnight VPOC to get long to come back across. It just didn't get down there. And the key to that was that lower distribution held, you know, wherever that went, down here. So this was the area to get long on the test, which I think was here or here. I don't remember. Here. This was the long. And that's not a I didn't take it, you know. I don't take it. I don't take it. This is a short, right? If you trade counter trend. Now, this is a trade that I would take, but it's not a trade anybody ought to take unless you trade, you know, unless this is your thing, if you can do it. Depending on the trader, the trader who's developing an edge should not trade short. They should use this to recognize maybe it's time to get out of Dodge. Or, see, this is where there's so many ors in this because it's a time frame process or fractal. I might take a short here just to trade around this. And that's the end of the trade. I'm just trading rotation. Other traders will maybe exit here, or their stop is way under here and they're going for the Hail Mary pass, the long ball. I can't tell you what's the right thing to do because I only do my thing, and anybody can do anything they want to do. It just has to have an edge. That's all. This is a business of edge. So what's the right thing? You know, I'd love to tell you what the right thing is. I don't know, because the right thing for me is not the right thing for you. Now, there's 60 PDFs of these trades I'm talking about here. And what I did in Trader Lab and do is I support the community, but I've also shared, these are just trades that I took many, many years ago, and there's screenshots of them. And it's not plug and play. I mean, the problem, of course, for us is we'd love plug and play, but it's not. Otherwise, we'd all just, when the line crosses over, we do this or that. And somehow, in spite of the winning trades, we'd actually be profitable. All those trades win, but they don't have edge. And I can't say for you, I'm saying for most retail traders. So you're always going to work on fixing it, right? Make it better. I get it. I did that for maybe 10 years. And I kept waking up with the same result. So for me, this is a short. And it's not a short for you, you see. And it might only be rotation. No, in fact, let me look at it. I know I got stops under here. And I know my buyers are here. This trade could just be to come outside. It's just, it's like riding the New York subway and being a purse snatcher. But I can trade this, you know. And it's got enough range to make it worthwhile for me. I hope that makes sense. It's not necessarily a right thing to do. It's just a thing. When I see liquidity, like let's say this is added in here, I don't know what its intent is. I suspect, and that's all I got, is it's skewing the book. And why might this come in here? I mean, and it's a guess because nobody knows. If I want to get long and I throw this in here, what's going to happen is it's going to skew the book, and maybe it pushes me down into these stops under here, and then I can take the other side and pull this and flip it around and push it back up. So this coming in here is useful for my short if I took this. Now, my short is not anybody's short. Nobody should trade like this unless you've got a lot of mileage on your odometer. Don't forget, I'm trading going on 46 years with a professional background and out here with you. What I do is not, the only thing I do is I'm doing the same thing everybody else does. I just can do it in shorter time frames because I can execute on a very timely basis. Otherwise, I should not even be in this trade. What I should be doing is either flat or waiting out here somewhere for a continuation trade to come back up here. So I can trade from here outside somewhere. Remember, nobody knows. And what do I know? Write this down, guys. We are trading rotations. This is a fractal. When we are trading the higher time frame, what are we doing? Aren't we doing the same thing? Aren't we trading rotations? It's the same. Aren't we trading rotations? Yeah, except it's a higher time frame as you think of it. Well, I think of it the same way. But when I go down into the developing daily time frame, it's the same, except now the range is much smaller. So I can take the concepts that I share with you and I can fit them over any fractal or time frame I want. I can treat this little behavior up here like a day. I can treat this next auction like a day. Too high. Too high. Where's my retail? Here. Too high. Where's my stops? There and there. I trade it to where? Into stops. Into stops. It's a kind of just a way to slice and dice the enchilada. So if I take and I know I'm trading counter trend. It's not, I don't have blinders on. I know that I've got to be very aggressive and get risk neutral and then not hang out. As soon as I get a sense of absorption, I just hit the plunger. It doesn't matter. I just am taking a trade. But it's specific to the condition of the market. So it's not generic. Now here, see the behavior? Right here. I got absorption. There's an iceberg. So right here, I know I have sellers there. I have buyers here. I have microstructure right here. I've got to get below that to go lower. If I come above here, then this is my resistance. And if I come across here, the trade's over. That's as deep as this is. And where's my outside edge? It's under here. So this trade could be done. Now, I don't have a problem with it, but I'm reading the order flow. And where's my last buyers? Weren't they here? See? So if we have the buyers and these guys were absorbed, isn't it reasonable to think that we could see it here? This is a bit advanced, but can you see the logic and how the order flow might help you? I hope you're getting something out of this. Why was it a short? If you're asking me, Archer, up there, it's strictly a rotational trade. It's not a short for developing traders at all. That's, I think I'm hopefully getting that across. It's a short because the weak side are the longs in here now. And then because of this aggressive buying here, which was against this volume right there, that's where the absorption took place here. I can anticipate, and I don't know where it'll go. That's part of the thrill, that if I come here where my absorption was, those buyers might show up again. That's why right here, you could be out of this trade here or, subject to how you handle it. And whether or not it goes lower from here or comes back up here doesn't matter. It's just a trade. And it's a trade that has to be vetted, and you have to have a statistical edge with it. You don't have an edge, you don't have a trade. And it's really there. You see the high, watch the high volume. The high volume is right here. So let's remember what happened here. Sellers were here, buyers were there, and of course buyers were here. So if I have my sellers here, there's where my volume is, and this is where my buyers were. So that's why you got to understand structure and order flow to operate in this. It's not for developing traders. But for me, it's okay. I just boom, boom. And then the choice becomes either get long over here, and then you're looking back towards this. You see, you could trade either side, both sides, or no sides. Or you could be done for the day and get back in the Barca Lounger. Because for me, it was 30. And then I don't care, I'm not here to be busy. I'm here just to take trades that have edge. So I can be taking this down to here. I can be taking this back to there. Right here, there. And then either out the top or just back to where the all this was. And these aren't trade recommendations. It's just what you can do. And the outcome is always random. Doesn't mean you should do it. But the idea is know where your trades are and don't trade in them and don't make it up. Yeah, well, yes, it could be, the long would be here and it fails under here. But, this would be my last trade right now. I'm okay. And here's why. These are my targets. So what do you do about this? Do you keep going long or are you just done? And, when I say you could do this, yeah, you could do it. This is my last trade. And I can beat it. That's it. I know I got buyers here. And I know I got, because of the buyers here. I know I got buyers here and stops under here. If I get under here, I'm going to break down. If I don't get under here, then I can go up. That's what I know. So I can be done. Have you guys ever thought about that you take trades that give you the best opportunity and that you're not here to be busy? That the better opportunities might be behind us right now? And now you're getting in the noise? Can you tell the difference? Now, I don't have the answer for you. I have the answer for me. Only a short here. And for me, getting long, because I got over this area, the fuel is out. So if I don't have buyers above the buy stops, then what? You see? And I can't tell you what it's going to do. So you could be taking longs for continuations. Me, I could just take this and be done. You see? But every time you see a wiggle, you got to know what you're going to do. Is this a long for you? Notice what's going on here. Let's just see. Buyers are here, buyers are here. Buyers are there, and buyers are still here. Isn't that interesting? So if you put a trade on, you could put it on there. And then you got to look up here and see where the selling was. Look at these sweeps up here. Let's do a little drawing on the old chart here, just in case. We'll see what this does. And again, for me, and I'm not calling trades, I take stops, you take stops, nothing new with that. I have nothing to do here. Remember this, the market goes up to go down. The market goes down to go up. The market goes up to go down. Market goes down, go up. You see? So if you take this, you come out here, you're, as they say, toast. If we hold this, after this, so the buyers are here, there's the icebergs, and the buyers are here, absorption. Now we have to get above here, and it's sequential. If I can get above the shorts who have their stops here, then I can come back. So that's the only thing this has going. Trend is up, absorption here, looking out here to get risk neutral, and then a helmet, and then this thing, no clue. What's this doing over here? And the stops are sitting above the swings. So stops are sitting there. Then you got to see. And this is, so all this is material. The first location to get scaled is right here to get into the shorts who have buy stops. So you sell into this and then you just hold and then you manage your trade, whatever it is. I hope that makes sense. And again, I don't call trades. I'm just giving you the scenario so you could see how you might narrate the market and be waiting for trades that are in alignment with your plan. Hope this is good. Tom Beer. How long did it take me? I'm still working on it. But I know myself. I understand my fear. I know where it comes from, the uncertainty. And I really, what I do is I just know what I will do. I don't know what the market will do. So I don't think too much about it. I always am apprehensive because I'm in an environment of uncertainty. So I'm wired to look for certainty where it doesn't exist. So instead, I look at what the participants say. So I know this right here was an area to look for a long, right? And I know that the shorts, and that could be me too. I say, I'll take this short. I don't have a problem with that. And then if I'm out of the short, I'm going to look at the long. And then where was my sellers? My buyers last were right here. See where we are? This is how I use order flow and structure. And why were they here? Because my buyers were above my sellers. This is absorption. My sellers were up here. They were absorbed. There's the icebergs, and the sellers are below. If I get along here, this is just the opposite side of it, and I come back here, this is a scale. And then it's either out the top or nothing. And then it's trade management. Because what might happen is I might go do this, do this, do this, do this. Or, since the trend is up, this is resistance up here. It's a high volume node. And that's like a little VPOC, if you know what these things are. A little VPOC, or microstructure as I call them, is where the volume was over here and we broke away from it. And this, of course, was a sweep. This might, I don't know if it's the high of the day. It's not my job. So let's watch the behavior. What does this liquidity do? Do they pull, or are there sellers waiting here? And then do they absorb the buyers? See the iceberg starting to go off? And do we fall out of here? That's what I know. I know what might happen and where it might happen. And then again, that's random also, but I have a clue. And then I know if I'm coming up here, this right here could be a problem because of what happened here, you see? And then I got that too, just to add a little seasoning into this. Resistance, obstacle. If I can take out these guys or they pull, then north. If I can't get over here, rotation. That's as deep as it is. Are you guys tracking? Costello is asking, do I leave a limit order? No, I never put an order out because I use triggers. So this is a trigger, or I should say it's a location. This is the test, and this is the way I think developing traders ought to do it. Then I get the trigger here. So I have this where there was buying, absorption, and I get the absorption again with my buyer. So look at this, absorption, buyer, absorption, buyer. How do I enter? There, there, stop can go there or there. And then where am I going? Here. And then after that, clueless. And then what do? I have a trade management process. So this trade could just go there to there, or what's the opposite? There to there, or to there, and then turn the bus around, go to there. Now this is not, I don't like trading like this. It's too busy for me. I got to be so focused. But I want to show you these trades. These are trades I would take, but I'm not saying I like them. I'm just saying they're my trades, you know? And if you guys think you should be trading this, I'm going to tell you no, because you will put yourself out of business in 15 minutes trying to do this. You'll chop yourself up, and you'll hit your loss limit in 10 minutes. Have you ever done that? And hopefully you have a loss limit. So for me, I can do this because I've trained myself. But for a developing trader, if the trend is up, what was I saying? You skip these and you take continuation trades in an uptrend. So you would just be taking the longs back to resistance. And then you could be done. This trade could just be there to there. And that does put pepperoni on the pizza. Are you guys with me? Costello, what I always suggest in Trader Lab is that traders create a binder of behavior. So if we're working on triggers, we got to isolate them and develop the discipline. If we get a trigger, to understand where it might come. If we have the reverse trigger, we have the sell trigger here, and I get a buy trigger here, wouldn't I take a profit at the sell trigger because my sellers were there? The reason I would get long here is because the buyers are there. Well, if the sellers are here, maybe I would take a profit or at least scale here. And then since the trend is up, here's the beauty of this, and I hope the message comes across. Depending on your thing, your edge, it's only longs. Shorts are exits. It's only longs. The sell triggers, back the return to them, is a scale or an exit. And if the trend is up, you're only taking longs. If you're a counter trend trader, and by the way, to succeed in this business, you need to trade with the advancing side, not trade the counter rotation side, which is taking out the weak buyers in this leg. Remember, I just showed you the market is fractal and rotational in all time frames. So if I'm trading this, then I can trade to that. If I'm only trading with the longs, who are the guys who are in control, then I'm only trading this. But as a developing trader, I would only trade this because the trend is up. Does that make sense, everybody? Please give a like if it's making sense. If it's not making sense, come to Trader Lab. Use the link in the bottom of YouTube. And I think almost anyone can learn how to trade if they do the work. If they come to Trader Lab, doesn't mean you'll be successful because a lot of traders don't do the work. Or they don't understand the psychological stimulus, fight and flight, and how the lunatic under the hood is driving the bus and not them. And that is going to be your hardest or your toughest obstacle. So the question for this astute audience is, was this a short for you, or was it only a long? Where's your skill? Where's your alignment? Where do you think the edge is? Don't you think it's the longs? See? Does this make sense? How we doing in YouTube? Guys, give a like, support the channel. It's kind of nice. Subscribe also, and use the link in the bottom of YouTube if you'd like to learn this. It's different. And Trader Lab is really an advanced methodology. And it doesn't matter how long you've been trading. The fact it's advanced, it doesn't mean like it's complicated. It's actually simple. Now you're going to say, how can it be simple? Um, it's organized. It just is random. So random never goes away. But if you can narrate and understand market mechanics and you're not dependent on your indicators to translate this, what would you be doing? What does your indicator tell you? Does your indicator tell you get short? Does your indicator say get out? Does your indicator say get long here? I don't think so. Your indicator may tell you to get long. I don't know. I can't tell you. I don't use them anymore. But I know the conflict that's created with multiple inputs. It in that conflict creates paralysis, and you don't have a way to measure anchored inputs in order to see if certain behavior under certain conditions has a statistical edge. The business that we're in is gaming. So if we understand the game, if you will, then we only take longs because the advancing army has the edge. If we're counter trend, it's not the same. So you need a trend plan and or alignment with the trend plan, and you need, if you're going to trade counter trend, a different plan. So developing traders longs only. Does that make sense to you guys? And remember, my investor RT is not updating here. Let me check something, by the way. I see the problem. I now understand the problem, and things should get working again, theoretically. There must have been a hiccup in the data somewhere because the data feed to investor RT went down and I didn't know it. Let's see if we can start this thing again. So, can you guys see why this is a long? And notice what happened here. These guys, let's see what they did here. No, still going north, aligned with the trend. Let's see if we got any targets up here that are worth looking at. So we are out here, 59.61. So right now we're kind of out in the ozone, you know. Basically, it's trade management out here because we don't know where the high of the day is. This does have some meaning. It's 61, but you know, so it's trade management. I'm going to see if I can get an investor RT going. Wolf of Forex, I really don't know. I don't personally, I don't think much about options, though they're very material. I kind of have tried to keep things simple. I'm trying to start investor RT again here, and that could be ugly, so we'll see. If you hear all kinds of ruckus going on, it's because investor RT's throwing a fit. Let's see what happens now. Got to give it a minute. You guys have questions? Yeah, it looks like it's operating here. Let me get back. I'm sorry. Let me get back to Bookmap. Sorry about that. So these ought to potentially update. All right. So these are the key levels. You know, singles, very important. They are where the market ripped last time it came down and it left these behind. The market tends to come back and check them. That's why they're targets. So the last long is this. Counter trend short is that to there. I hope you're getting something out of this. And these aren't trade recommendations. This is just the way to organize information and develop a trade plan. I'm sure, I can't say I'm sure, but I suspect there's traders that are just long from near to low of the day. I suspect they might be done, but, it's not my job. Outside edge of this distribution is down here. That's your low volume node. This is low volume from the last time we were over here, which is a couple months ago, I think. And there's liquidity stacking up here. So the liquidity comes back in here. That's pressure. This got taken out. They were swept. This can be support now, not a recommendation, and so can this. And it's just order flow phenomena. It doesn't mean a thing, does it? Let's see if we can think about this a little bit. These are areas to observe. Microstructure, outside edge. So this is your distribution. We have potentially so this is what we want to see. We want to watch this. Outside edge. High volume is here. The market can do this or not, or fall out and start marching down. See, this is the auction. Let's see what it does. Who's asking about LVM? This is called trading in fractals. And a fractal, as I see it, is not a time-based rotation. It is a participant-based rotation. Stephen, with the IRT problem here, what happened is I have a couple different data feeds here. So my IRT feed went down, and I didn't realize, because when our Trader Pro drops, it doesn't tell you, So IRT throws a fit, and that was making those big buzzes, but Bookmap was still percolating. So I'm, kind of had data, but, kind of weird. Anyway, that's all fixed. So these are current now, current high of the day, and these are all the levels. So, and notice where we came. Now, this is not actionable for initiation. What I can do with this is I know where my buyers, don't forget my buyers are here, but I have the same structure here, and I have liquidity. So this is an advanced concept. This is support. And you guys see me do this in Trader Lab all the time. This is an auction in the microstructure. What is this? Why would I look at this? I can't see it in here. This is the developing daily time frame. Think of it as a higher time frame thing, right? Well, if I'm using this structure, I'm now trading this. This is what a fractal looks like. So it's a low volume node. Oh, it's on sale. Retail, it's too high. But if the trend is up, where's too high? Wouldn't we like to know? So now I might not trade this, but if I'm sitting long, I might use it to trail my stop. And I also know that if I fall out of here, I can come here in the next higher time frame, and I can even come out here and take all these guys out. Anything's possible. Hope that makes some sense. Please give a like if you're visiting in YouTube. Also, I want to show you Trader Lab briefly in case you haven't observed Trader Lab, what's going on. This is T46 posting. Thanks. Thank you, Stephen. This is the Trader Lab. Serious. It's all about building out the business of trading. You can see there's a lot going on here. A lot of sharing, a lot of inputs, camaraderie, support. Trader Lab is advanced methodology. There's a lot going on in Trader Lab, data mining, research, and helping traders understand the business they're trying to be in. This is not a plug and play business. This will drive you crazy if you think this is plug and play and you have an ATM in the basement. It doesn't exist. So what does exist? Maybe understanding how the market works and then developing a plan that when you recognize a specific condition that is in alignment with a vetted plan, that's when you go to work. You bring your plan to market. You already know what you will do, not what the market will do, and you put your trade on, you take your risk, and you take your stop, or you get your scale, and you get taken out, scratch, or you manage the trade, and it goes on. There's nothing more than that to it, really. So this is what the Trader Lab community looks like. A lot going on here. You're all welcome. There's no cost. Also, there's a library of webinars. Start here. 32,000 views on this one. It's a high-level overview of concept. You need to know the concept. Meet the Trader Lab. You might want to check that out. And then we have another one in here, Ned, if you could replace this one, which is Stop Gambling, Start Winning, wherever that one went. And then Trapped in Trader Groundhog Day. That is where you're working hard, waking up with the same results in spite of winning trades. Remember, everybody has winning trades. It's not the problem. Anybody can have a winning trade. You don't need a chart. You don't even need to know where the market is, and you'll have winning trades. That ought to tell you about trying to have winning trades and trying to solve if you don't have an edge. This is a business of edge. So, are you interested in the business and understanding the business you're trying to be in? Because you might be trying to solve for something that is not solvable in a random environment. I understand. I worked very hard on trying to solve that. And more years were spent trying to solve that because I didn't understand. I was in a gaming environment, not in a let's be right and let's predict what's going to happen next and slamming indicators into some kind of brew that would give me a red light, green light. Unfortunately, it didn't work. And I tried to remedy that with trading systems because that was optimization. So really curve fitting on steroids. That didn't work. Can you guys see the long? Can you see the long? And can you give me a like and a thumb up? Use the link in the bottom of YouTube if you want to visit Trader Lab community. Download the 60 PDFs of structured trades. Join the community. There's no cost. All you got to do is verify your Discord email. You use the link in the bottom of YouTube, and then, as they say, mosey on over to the Bookmap Discord Trader Lab community. Say hi, and let's work together and go from there. Don't forget the like. Thanks for visiting Trader Lab. Look forward to seeing you all tomorrow.